This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Demand for U.S. natural gas to produce liquefied natural gas, LNG, for export this year is headed for its first decline since the country started exporting the super-chilled fuel from the lower 48 states 8 years ago. The U.S. is the world's largest exporter of the super-chilled gas and a key provider of gas to Europe in the wake of Russia's invasion of Ukraine. Natural gas prices have remained relatively high in Europe as the expected U.S. growth in output in 2024 has not materialized, and the continent is bracing for a new gas price shock as colder winter weather depletes stocks. Natural gas drillers have profited from robust demand from LNG export plants, especially since sanctions on Russian gas boosted European demand for US LNG.
Oil prices settled little changed on Friday as markets weighed Chinese demand and interest rate cut expectations after data showed cooling U.S. inflation. Brent crude futures closed up 6 cents, or 0.08%, at $72.94 a barrel. U.S. West Texas Intermediate crude futures rose 8 cents, or 0.12%, at $69.46 per barrel. Both benchmarks ended the week down about 2.5%. The US dollar retreated from a 2-year high, but was heading for a third consecutive week of gains, after data showed cooling US inflation 2 days after the Federal Reserve cut interest rates but trimmed its outlook for rate cuts next year.
Moving on to the top news in the energy sector.
US President-elect Donald Trump said on Friday the European Union should step up US oil and gas imports or face tariffs on the bloc's exports that include goods such as cars and machinery. The EU already buys the lion's share of US oil and gas exports, according to US government data. No extra volumes are currently available as the United States is exporting at capacity, but Trump has pledged to further grow the country's oil and gas production. "I told the European Union that they must make up the tremendous deficit with the United States by the large-scale purchase of our oil and gas," Trump said in a post on Truth Social.
China's fuel oil imports hit their highest in 7 months for November, customs data showed on Friday, as more supply was drawn over for the bunker pool, according to industry sources. The imports totaled 2.55 million metric tons, or about 540,000 barrels per day, data from the General Administration of Customs showed. The volume was higher by 24% month-on-month and more than doubled year-on-year. This included purchases under ordinary trade, which are subject to import duty and consumption tax, as well as imports into bonded storage. Next, we have the top news in metal markets. China's coal imports from Australia rose to their highest in more than 4 years in November, customs data showed on Friday, as shipments continue to recover from an unofficial ban on Australian coal that was lifted in January 2023. Australian coal imports were 9.3 million metric tons in November, according to the General Administration of Customs, the highest since April 2020 and up 47% from the same month of 2023. Year-to-date, at 74.15 million tons, 2024 coal imports from Australia have already exceeded last year's 52.47 million tons and are on track to top the 77.51 million tons imported in 2020, the last full year before the ban.
Iron ore futures prices fell for a fourth straight session on Friday and were set for a weekly loss, pressured by the seasonally slowing demand in top consumer China as well as concerns over demand prospects in 2025. The most traded May iron ore contract on China's Dalian Commodity Exchange ended daytime trade 0.77% lower at 769 yuan, $105.38, a metric ton. It fell 3.7% for the week. The benchmark January iron ore on the Singapore Exchange lost 1.24% to $100.55 a ton, as of 0700 GMT, the lowest level since November 25, approaching the key psychological level of $100 a ton.
We will now look at the top news in the agricultural sector.
Russia, the world's largest wheat exporter, said on Friday the wheat export quota had been cut by 63% in the second half of the exporting season to 10.6 million metric tons, implying exports would be sharply reduced next year. The official figure is broadly in line with the Russian quota of 11 million tons made public late last month by the Eurasian Economic Union, a trade association of Russia and 4 ex-Soviet countries. The cut is part of measures to improve domestic supply and fight inflation, currently at 9.5%. Russia estimates this year's wheat harvest at 83 million tons, down from 92.8 million in 2023. Last season's quota was set at 29 million tons.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.